And even as China continues to consume vast amounts of energy and resources, there are concerns that there is an oversupply of Australia's exports, such as iron ore and coal, that could develop. For more on this, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
Now, despite that drop in growth in China, it's still expanding at a rapid pace. So what impact will this have on consumption of Australian resources?
Whitney, well, China still continues to expand at good rates. GDP still around about that 10.3%. But what we're feeling is that they've got that oversupply, and we feel the prices can actually come off a little bit. And that's exactly what we're seeing at the moment, where we're seeing this massive amount of slowdown occurring in China, and that certainly will affect us.
All right. Now, some analysts argue that the focus is in the wrong direction and that there is a real concern about massive expansion in global supply.
Well, there is, and we've seen that by the Baltic Dry Index. The BDI has dropped from about 12 months ago from about 4,000 to around about 1,700. And the Baltic Dry Index is an index for freight shipping around the world. And China makes up about 29% of that actual freight. So if you see that slowdown continue, then you're actually seeing we're getting that oversupply because they're not consuming as much as they need.
All right. Now, you mentioned though that Australia could be affected by that drop in, slowing in China. How badly would Australia be affected by that?
Well, these are the reviews which we've got to look at, particularly in the prices of BHP and Rio. Because at the moment we're forecast some very good profits for both these two companies. And I feel if that slowdown does occur, then the profitability towards these two miners will have to alter. And we'd probably actually look for a review in the profitability of both of these companies. And I would be close saying that BHP, if it breaks through that 35 level, and Rio through that $58, we could actually see more consolidation for the big miners and that their asset prices should actually come under pressure. So it is a concern for the big miners. I think it's also a little bit of concern for Australia.
Is it something, though, that Jonathan Barratt, that the big miners are really paying attention to? Are they just caught up in this wave of growth? And is there a danger that, if they do continue to expand, that could lead to a drop in prices?
Yeah, very much so. I think we've got to really look at the consumption, for our primary inputs. And we've been riding on the back of the commodity boom for such a long time. And it's sort of like as if they're relatively blasé in their approach to profitability, that it will continue to climb. But if China does continue to contract, it will affect them. And yes, I think I would be concerned going forward that perhaps they have sort of spent too much in the wrong areas, and in fact their profitability will in fact come under pressure.
Well, it's interesting to note, why wouldn't they be paying attention to this? Because at the end of the day, if this happens, it will start to eat away at their huge profits. Yeah,
well, we have seen it. If you look at the prices for iron ore, they're looking at iron ore prices, have dropped considerably in the spot market. So they are actually looking at where the price is, but they're actually feeling that this is just a temporary fallback. Remember, interest rates around the world are at major lows, so there is that prospect for growth to occur. But I think they're monitoring the prices at the moment. But if the global economy starts to slip back, because China's coming back, well, then that has to affect the supply and also the demand for primaries, and that should affect the prices for these two big stocks.
All right, so what you're really saying is that even though there has been a drop in spot prices, the rise over the last couple of years in iron ore has sparked mining companies to pay much more attention to that, and it's quite dangerous for them.
It is dangerous. We had prices move upwards from 15 to 20 to 30% per year on year. So it just only goes to show that you could get blasé about these pricings. The spot prices have actually moved a lot lower, so therefore the forward prices are also coming back. So I'm sure that they're looking at the prices, but I think it still is a concern if in fact China doesn't continue to grow.
All right, another situation that has been raised is that if we do see continued high iron ore prices, some believe that could push China to opt for cheaper alternatives, such as scrap metal. What do you think about that?
Oh, look, I think I do believe that they would look for cheaper alternatives. But you've also got to think what China's been doing. China's been out there buying their resource. They've been buying companies around the world, in Canada, Kazakhstan, Australia, South Africa, all these producers of primary imports. So what they're looking to do is to not pay homage to spot prices. They're actually looking to be able to control the price of their primary imports by actually owning those companies externally and then shipping them back home. So it's a strategy which they've had for some time, and they'll probably continue. So, you can see that they're trying to make sure that the supply of these primary imports will remain constant and not be at the beck and call of the spot prices in the market.
So, Jonathan Barratt, would you say that it's now that commodity-based economies like Australia should be looking for rather solid engines of growth to allow for further slowing in China?
Well, yes, I think it is a concern. I think what we've got to do is bring into perspective, GDP or industrial production in China running at, 10-11% is still very, very strong. But if we've been basing our economies on that maintaining, then I think we have a concern. If IP drops back, that will affect us, and I think we've got to look for other means and measures to secure that long-term growth.
And briefly, before we go, where would we look for those?
Look, I just generally feel that it has to be across the board. We rode on the sheep's back many, many years ago. We're riding on the commodities back at the moment in terms of iron ore and coal. I think we've got to be a little bit more diverse in the way we export our research and our goods.
All right, Jonathan Barratt, we'll have to leave it there, but thanks for your time today.
Thanks, Whitney.